Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with Nagar, and this is Market Today, a show where we'll help you understand the closing action on the day straight. And the markets have a tendency to surprise you when you least expect it to. Expiry session started on a very volatile note. We did think at one point in time it will break that 4-5 days of a run-up that we've been seeing so far. But boy, you look at it, the kind of move that we've been seeing. 372 points higher on the Nifty. We're at the high point of the day, and 24,800 is now with us. Look at all the market breadth and look at all the sectors that are buzzing. IT, 2.4% higher in trade right now. Stocks like TCS and Infosys are 3% each as well. Look at, private banks that are doing very well at this point in time. The banking index itself is also on an up move. You can see the private banks up by 1.1%. 1% uptick for the Nifty Bank. Autos up by over 1%, despite all this, concern of slow CG, metals, you name it, even the broader markets, they are percent uptick even for the PSE index as well. And the stocks that we'd been marking right from morning, stocks like BSE, 13.5% higher as a top mover in the F&O space. Good afternoon, Shell. It couldn't be better.
Yes, it couldn't be better, Sakshi, and frankly, the smile is coming deep from the heart. We've had terrible days from October till the first couple of days in December, and patience pays. And for all those who did purchase the SBI Nifty ETF, which I have been banging my head on a daily basis, congratulations to you. Still good news in the offing. It's at 262. We started purchasing at 249. So that is something that you should be looking at. And of course, Sakshi, I am the happiest, 24,828, 1.5 percentage points higher. Look at the advanced decline on the Nifty. 46 out of 50 shares are in the green. And in the overall market, it's not as if there is a great bull rally. 1354 stocks in the green, 1000 in the red. But what is really good is that for the fifth day in a row, the advanced decline ratio is overwhelmingly in favor of bulls. And we've taken this 200-day DMA to heart, and buy the dip is working brilliantly, as also is the risk on strategy. Remember the bad things that we've digested from Monday. Let me just reiterate the reason for this rally. The lowest GDP growth in 7 quarters, which is, ladies and gentlemen, 21 months, 5.4%. Increase or proposed increase in GST on luxury items. आजकल चल क्या रहा है, luxury goods sales. उस पे भी सरकार नए टैक्स लगाना चाहती है, although they are saying it's a proposal, but on December 21st it will be a reality. What else has gone wrong? South Korean issue, martial law imposition, and of course the French problem with their government falling down. In all this, ladies and gentlemen, the Nifty has added what? 600 plus 244, 844 points in the last 5 sessions. Abhi aur kya chahiye?
Absolutely. This couldn't be better, and slow and steady base building happened, and 24,800 is now back with us. Let's hope that this sustains with us. Let's actually welcome planning as to what should be our strategy in this buoyant market. Nilesh Jain, Head and Vice President of Technicals and Derivatives Equity Research at Centrum, is now joining in. Warm welcome, Nilesh. Good to have you with us. Are you also smiling as far and wide as Shell is, looking happy with 24,800 back on the screens? Finally, be good to see those good days back after weeks and weeks of pain.
Very good afternoon to you, Sakshi. Good afternoon, Selin sir, and good afternoon, everyone. Absolutely, it's a fantastic day of rebound from the lower levels. At one point of time, Nifty was trading 100 point negative, and from those levels to almost 300 plus point seen on the back of weekly F&O expiry for the Nifty. The good part is that Nifty reclaimed its 50-day moving average today. And if you look at the overall setup, it looks like the next resistance for the Nifty coming around 25,000. So that's the next psychological zone that Nifty is likely to test going forward. Support is at 24,500. So immediate basis, the stop loss should be placed at 24,500. And we expect this momentum to continue. On the other hand, Bank Nifty, where we expect Bank Nifty to hit a new record high before Nifty hits that. And the next level to watch out for in the Bank Nifty would be 54,000 followed by 54,500, and support is at 53,300. So overall, looking at the today's move where we have seen across the board buying, I think it's a buy and decline structure for the Nifty and Bank Nifty both, but we expect Bank Nifty to outperform from here.
Right. And Sakshi, while we are discussing statistics, let me give you some very interesting ones. In the NSE 500 top traded, out of the top 20 stocks, 22 stocks, only 3 are in the red and they are just minor losers. I wouldn't be worried about at all. 11 stocks have traded more than 1100 crore rupees. And hold your breath, BSE is the top traded counter today. 5,128 crores worth of transactions.
Wow.
CDSL 3,100 crores, Zomato 2,500 crores. So this is how the risk on trade, ladies and gentlemen, is back, and all these 3 stocks, BSE, CDSL and Zomato, have entered the FNO in the month of December. So you could have seen theoretically higher levels in the derivatives and the options market, but that has not happened. So that points to continuity. Probably this is the first day of the BSE rally, and CDSL has been rising for 4 days. People must understand that 15% of CDSL is held by BSE.
Yeah.
Therefore, it's a sone pe suhaga.
Bilkul.
So keep that in mind, ladies and gentlemen. This is looking super good. Now 24,800 is with us. Sakshi, अब अपने को 25,000 की तैयारी करनी है. Friday को ही निपटा देते हैं.
Yes, let's hope for some dovish comments coming in from RBI Governor, which is the much needed impact that the market will be really looking forward to on Friday. And, largely to the tune of that, yes, rate cuts will be coming and coming as soon as Friday, as February. It will also be pretty welcome, I believe, for the markets, because the markets have already penciled in a no rate cut kind of a scenario in the December policy. But February is where most of the economists are really looking at. Even a CRR cut on Friday will be a welcome move right there. So that's something that we need to also keep an eye out on. Nilesh, let's talk about the banking space that's been in fine fettle. It's come back so strongly in trade today also. It was lying low in the first half. Your sense on within the banking space, where would you continue to keep your eyes out on? Private banks like HDFC Bank are soaring, record high moves can be seen. The ICICI Bank is also contributing. At the same time, PSU banks came back strongly over the last few trading sessions as well. Financial services names, AMC names, broking houses names, they're also in fine shape. So how does one really approach the banking space? And not to forget, FIIs are coming back, Nilesh. And FIIs really want to put all their money in these large cap banking, IT spaces. So definitely this is also getting into a favored zone. Your sense?
So Sakshi, if you look at in last few trading sessions, we have seen Bank Nifty have started outperforming the Nifty index, and the leader, in fact, of all the banks is HDFC Bank, where we have seen a constant new record high coming in. So given this kind of setup, there is no doubt that Bank Nifty is likely to lead the entire run up from here, and we expect Bank Nifty to hit a new record high as well before Nifty does. Within banking space, not only private sector bank, even as far as private sector banks are concerned, ICICI Bank, this particular counter has given a good breakout from a symmetrical triangle formation. Looks strong for 1360, 1380 target on the upside. Stop loss can be placed below 1321. So that's the one preferred bet within ICICI, within private sector bank, that's ICICI Bank. And within PSU Bank, SBI continues to remain a preferred bet for 900 plus target. 855 should be the stop loss for the long position, which is today's low. And yes, State Bank of India is FIs have started, have already made a good comeback, and large caps have started witnessing turnaround. Specifically, a laggard, which is Reliance Industries, where we expect a strong rebound from here. So Reliance Industries looks like a bottomed out, and 1300 should be the stop loss for the long position, and we expect a follow-up move towards 1355 to 1370.
Okay. Reliance Industries is something that we can definitely focus on from here on as well. Let's also look at the IT space that's been in the top form in trade today. stocks like Infosys, TCS, 3% each, then you also have Wipro, HCL Tech, Tech Mahindra, and of course the mid caps also doing very well. The index itself is up by about 2.3 odd percent right now. Of course, all the stocks are up into the green. Large gains coming in, over 1% gains coming in on at least 10 counters there. Starting with L&T Tech, Emphasis, Persistent, Tech Mahindra, HCL Tech, LTI Mindtree, Wipro, TCS, Infosys and HCL Tech. How would you really look at this entire basket right now, and where do you think one should continue to put in even fresh funds within this IT move?
So Sakshi, Nifty IT index, one of the outperformer, and this particular index has constantly made a new record high. So even if you look at now, it looks like it is heading towards 45,300 to 45,500 kind of a zone. The immediate support comes around 45,600. So overall, Nifty IT index as a whole looks positive. In this week itself, we have seen a spurt of over 4% in the Nifty IT index. So some profit taking could be a good opportunity to make a fresh entry in the index heavyweight counters like TCS and Infosys. Specifically, these two stocks are looking strong on the chart. As far as TCS is concerned, this particular stock looks positive of 45,550, 4,550 will be the first target, followed by 4,600, and stop loss can be placed somewhere on 4,400. Apart from that, Infosys is another stock where today we have seen a good breakout coming in. So this particular stock looks strong for 1970 to 1990, and stop loss in this particular counter can be placed somewhere around 1920.
Okay. This is the view that is coming in on the two frontline counters when it comes to the IT space. Sakshi, we'll mark the wealth management space in some detail for two reasons. The first two counters today are from that space, BSE and CDSL in terms of top winners and top gainers. Look at Angel One, 6% higher, wow. 32.14. This is the beginning of a new trend. We have a record high on K-Fintech, similar to CAMS. Wow. So these two back-end service providers with CDSL are now screaming at record highs. Then look at brokerages. In terms of gainers, we've Angel One. Geojit Financial Services is up 5%, 131. You have the AMCs going strong. So UTI AMC, Nuvama, NAM India and ABSL are up between 1% and 4%. So across the board, there is some very decent uptick in prices as far as both record highs and great volumes are concerned. While we are at record highs, let me just mention a couple of names. It sounds repetitive, but I purposely tell you these because you have to chase momentum on both sides of the equation. When the market is falling and a stock is at a record high, and when the market is rising and record highs are made, which essentially means the relative strength of the stock is far higher than the index and the market. So that is the logic, and you have in the form of top gainers, Zomato. A change of digit will happen, Sakshi. Today we've seen a brief spurt over 300. The day's high was 304. My bet is that a new life for Zomato has started in a different digit altogether. Federal Bank, the rest names we discuss every day, Oberoi Realty, Kaplan Point, Coforge. Naukri is at a record high. I mentioned it to you the day when you were about to go on leave. E-Clerks, fresh high, 2.7% higher. Persistent, Coforge, and which one should I tell you? Anand Rathi. Yeah. So these are the stocks that are hitting fresh highs today. I think in the list of permanent record highs, it's Persistent, Coforge, and these are the two ones that they've been doing record highs for a very long time. Yeah. Interesting. Nilesh, would it be difficult for you to choose between all these capital markets related stocks right now? With the kind of moves that we are seeing across the board, BSE, CDSL at record high levels, then Angel One, maybe Anand Rathi Wealth and all these others which are also following suit. Is it difficult, or do you have your charts absolutely telling you where exactly is the next move going to be?
Well, Sakshi, as far as BSE, this particular stock is concerned, is not advisable to buy at current level because the risk and reward is stock has already witnessed a good spurt of over 12%. So better to wait for some dip. It's a good portfolio, long-term stock. But yes, there is a breakout coming in the broking stocks like Angel One and Anand Rathi, both the stocks. Both the stocks are looking strong on the chart, and we still believe that there is another leg left on the upside. As far as Angel One, this particular counter is concerned, the upside target comes around 3400 followed by 3600. Stop loss can be placed somewhere around 3050. So this stock can be bought at current level and also be added on declines. Apart from that, Anand Rathi is another stock where the setup looks strong. It looks like it is heading towards a new record high in uncharted territory. That is 4500 to 4700. 4200 should be the stop loss for the long position in this particular counter.
Okay.
Fair. And you know, Sakshi, what's really interesting that over the last 3-4 days, I was noticing while the advanced decline was in top shape and favored bulls, volumes were not coming in. But today, it's the day of revelation. I can't. This is something to be checked. Let me just see when was the last time we saw such a heavy volume on Bombay Stock Exchange. 1 second. This will take a while. All the terminals seem to have gone shut. Let me just get that number back for you. But very nice rally on the IT index, which both of you have just discussed. Everything, like I said, it's the risk on trade which is back in the market. The logic that is running BSE is that now that you have these weekly expiries out of the way, BSE will now gain market share away from unlisted NSE. So this is what people are now betting on, and that's why you see this very sharp spurt. 10 crore 51 lakh shares have been traded, and this was 12 crores 28 lakh shares on 25th of November. So बराबर में ही है ऐसा कोई नई बात नहीं है, लेकिन 25th November को स्टॉक लाल निशान में था, आज हरे निशान में, बस फर्क इतना है.
Absolutely. Apart from this, let's also look at some of the other stocks that are buzzing beyond the IT pack and the ones that we've discussed in the market space. Titan is doing well, 2% after a long haul. This is coming back. Do you think the wedding season flavor is coming back to brighten up prospects for Titan?
So Titan, it looks like it is closing above its important resistance zone of 200-day moving average that is placed at 3,400. So a close above that seems likely, and from here we expect this counter to move towards 3,500 to 3,550. So overall structure for the Titan looks strong, and we expect this pullback to extend further. One can keep a stop loss below 3,360, and long position can be initiated in this particular stock.
Okay, got that. So that's as far as Titan is concerned. Even within the broader markets, there are some interesting names that are doing well. Innova CapTab is up by about 8% odd. I think this is one of the stocks that Vineet Bulinshkar has talked about as well. We have Jain Irrigation Systems that's up by 8.5%. LG Rubber is up by 9%. Landmark Property is up by 9%. Then you have stocks like Surya Lakshmi Cotton, that's also Maharashtra Seamless is actually doing well today, about 13% higher in trade. Kemfab Alkalis, those are some of the names that are actually pulling up within the broader markets. Even stocks like, say, Tribeni Engineering, Kalpataru Power, 7% higher for this one as well. That's the kind of buzz that we are seeing in the broader markets. Within this, what's looking attractive to you at this point, Nilesh?
Right, Sakshi. So a couple of stocks that have come in our radar, and first of all is Ace Action Construction. So this particular stock is currently trading at 1420, and today, if you just pull up 1 year chart, the stock has given a good falling trendline breakout, as well as it has given a breakout from its inverse HNS pattern. So Ace strong for 1500 kind of target on the upside, so that's the positional call. One can keep a stop loss below 1375, and Ace can be bought. Apart from that, another stock is Rain Industries. So Rain Industries have witnessed a sharp rebound from the lower levels, so we expect a follow-up move towards 170 to 175. Stop loss can be placed below 161. So Rain can also be added at current level and on decline.
Rain is something which is coming on many radars, and just to let people know, this has been a disappointing stock. Nothing has happened from 2022. So 24 months of pain, and periodically it reaches for a 20-30 point uptick, and then once that happens, so for instance, the most recent low is 145 rupees and now 165, which means that a 20 rupee uptick has happened. And Sakshi, loss making company, it has done nothing. Okay, let's just change the format to week, and then you will see that nothing this counter has done. Okay, why just 2022? It's done nothing since 1 second. Okay, let's just say May 2018.
Okay, that's
It was at 241 rupees. So it's one of those things which peaked out in February of 2018, and then there were some stock splits also. But full credit to Nilesh for pointing it out. This is something that's coming back into action from 145. I have a detailed note on this one, but that is how should I say, a vested interest. So we'll keep that out of the system. But Nilesh, since Nilesh has mentioned, I just thought that I'll give a overview. We saw 259 in September 2021, and from then it's halved to 145. क्या क्या होता है बाजार में?
And the Nifty also has quickly given up all those gains that we were celebrating just about half an hour ago. 24,525 is still with us, although 65 points are higher in trade, but there's been a swift profit booking that you can actually see on this one as well. Nilesh, how would you read this? Momentary pleasures is are the markets and the investors wanting to book out profits because they don't want to leave any room for uncertainty in the policy tomorrow?
Exactly. It seems like ahead of the event, it's time for profit booking. That's what traders are expecting, are witnessing. So as of now, looking at this kind of close, it also is not a bad close, because we are closing somewhere around 50-day moving average. A big doji candle can be seen on a daily time frame chart. So that's the uncertainty. But overall, on the closing basis, I think it's a good close. We have seen a short covering. I won't be surprised if we see tomorrow we see again the levels of 24,750, 24,800. So it's just a matter of time. What we are witnessing right now is just a volatility. And in the Bank Nifty, in fact, if you see, it has faced resistance near about 53,900. So 54,000 acted as a stiff resistance zone. So after this kind of profit booking, the risk and reward against turned favorable for the long position. 53,000 is the important support zone from next week's expiry point of view and in the coming session.
Okay,
53,298 for you, and that's an equally sharp burst of profit that's happened. Let's hope 24,500 holds. Sakshi, it's okay. See, what has happened is that the short sellers have been cleaned out, right? Nobody is again pressing shorts at 24,800. It's mostly options players who play on the calls and put side. So this is a nice cleanup that has happened, and once you see 24,700, 24,800 on the board, it means that it is coming. वहाँ से profit booking हुई है, ठीक है. So 24,700 call writer got very active, which is fine, and these kind of things happen. But the trajectory remains in positive, and that is what needs to be looked at. Half an hour left for today's market to close, but what an exciting day it has been.
Absolutely. Nilesh, we'll thank you on that note for being with us and for navigating these market moves for all our viewers right there. Always a pleasure to host you. And viewers, just as we were talking about, the big event tomorrow is the RBI policy, and all eyes will be on that, and the markets will be also highly anticipating some favorable comments to be coming in. To discuss and to decode for us, what could you be expecting ahead of the RBI policy to be to probably navigate your investments better, is now a very special guest, Rajni Sinha. She's the chief economist at Care Edge Ratings, is now joining in to give us a sense of what are the big bang expectations right there. Good afternoon, Rajni. Good to have you with us on this special edition of Market Today, where you're making a debut on this special market special show as well. But this is what the markets are probably looking at. The biggest event is tomorrow, and we were just discussing the other day when the G% kind of an expectation for 8%, and it has actually come in as a huge shock of 5.4%, 7-quarter low for the GDP number. Do you think this is going to be making the task for the RBI governor and the MPC really tough this time around, because the focus has been so far to manage inflation, but now it seems growth will also be coming onto the top radar?
Yeah, definitely, Sakshi. It's going to be a very difficult balancing act that RBI is expected to do tomorrow. Because if you look at the last data point for growth as well as inflation, both are concerning. Growth, as we had discussed last time, at 5.4% was much lower than market expectations. And at the same time, inflation data that we had at 6.2%, the last data point, was higher than RBI's comfort zone. So definitely it's concerning. But I think the central bank, while last time they moved to a neutral stance from withdrawal of accommodation, as you see, the governor so far had been mainly focusing on inflationary concerns. While RBI so far had maintained that growth was not a big concern. So I don't think immediately they are to jump to a rate cut in this meeting, given that inflation was above 6% in the last data point that came. And even going forward, the next two data points are expected to be, CPI expected to be around 5.5%. In such a situation, I think RBI will remain cautious, at least in this meeting, because RBI governor has been highlighting that they are concerned about high food inflation, even though the inflation is high mainly because of food, which is beyond their control. And that's the argument that is there in the market, that, it's beyond their control. So maybe they should go ahead and cut. But RBI has been highlighting that even if the inflation is high because of food, food inflation has an impact on inflationary expectations. And hence the risk of, the whole of inflation becoming more broad-based. Hence, I think probably in this meeting, they will not cut. Growth is a concern, but, like we had discussed last time, growth is expected to pick up in the third and fourth quarter. For the full year, we are expecting GDP growth at around 6.5%, which is definitely lower than what was being expected earlier. But I would say it's still not a very bad number. So I think RBI is likely to wait. And in the next meeting, Feb meeting, when CPI inflation is expected by Feb, it's expected to move below 5%. I think that will provide RBI the window to cut rate.
Right. Good afternoon, ma'am, and a very warm welcome to you on Market Today. I just wanted to understand in the market that this slowdown is temporary and was primarily on because of the 2024 elections that we held, and the fact that the government slowed its capex. Do you agree to this assessment? And if yes, then is 5.4 the worst that we've seen, or do you see this gravy train slowing further?
5.4% is the worst that we have seen. We expect growth to pick up to around 6.7% in the second half of the year.
Okay.
But the slowdown was mainly because of this factor that you highlighted. Government spending was low in the first half of the year. Having said that, it's not that there are no concerns on growth at all. There are concerns. If you see, even on the consumption front, there are concerns around the urban consumption, which had seen a big spurt post-COVID. There are some signs of moderation. And we are also seeing the signs of growth moderation in some of the other high-frequency economic indicators also. Even the corporate performance, the last quarter results have shown that, yes, there is a growth moderation happening. So to put it in a nutshell, yes, growth is going to pick up from this 5.4% level. This is the lowest. But yes, it is going to be lower than what was, we have seen in the past. The 7-8% growth that we have seen in the past.
And this hope that the markets seem to have built on their own, that a CRR cut is in the offing tomorrow. Do you agree?
So yes, this hope has mainly built up because the expectation is that probably RBI will not cut rate as a knee-jerk reaction to the low GDP data, but they'll take some action and probably cut the CRR. I think while I wouldn't completely rule out the possibility of a CRR cut, given that liquidity has, one is because of government spending being low. So as the government spending comes back to the market in the third and fourth quarter, the liquidity situation is expected to improve. reason why liquidity is tight is because of forex intervention by the central bank, and we are seeing forex reserves falling. It is factored in that probably US is going to cut rates lower than what was anticipated earlier. I think once the market has factored in those aspects, we could see FII inflows again coming back to the market. Given that India would still be recording a much better growth than what is happening all around us, and also because of India's inclusion in the global bond indices. So, because of these factors, this liquidity tight situation may improve going forward. Hence, in the near term, RBI may go for measures like OMO sales or recourse to VRR to take care of the liquidity.
Okay, Rajni, also help us understand what do you expect as far as RBI's own forecast of the GDP is concerned, looking at what we have at hand. They have an expectation of 7.2% for on the lower side from the RBI that account, and at the on inflation projections as well. Do you expect an upward risk that the RBI will be highlighting there too?
Yes, definitely. RBI is likely to revise its growth projection upwards because even when they were talking about 7.2%, it was much higher than what the market was anticipating.
Yeah.
And then with the second quarter GDP number at 5.4%, much lower than the 7% that to lower. As far as the inflation is concerned, again, their expectation of average of 4.5% looks difficult. We are expecting average inflation at around 4.8% with an upward bias. So RBI is likely to increase its inflation projection.
Right. And as you speak, Rajni, the market is so volatile. It's completely unbelievable.
Yeah.
10 minutes, no, I think 3 minutes ago, we had again 24,710. All this is very exciting for us at least. Get your view on bond yields. To multi-year lows, US bond yields on the 10 have sort of mellowed down. What do you think of ours? 10-year paper. What's your look, say, by March 2025?
I think our 10-year yields should go down from these levels because we saw some rise in 10-year bond yields kind of in reaction to what was happening to US yields. But given that there are expectations of rate cut, if not, like I said, I'm not expecting in this upcoming meeting, December meeting, but in Feb meeting.
Yeah.
So with that factored in, we should see the 10-year yields going down to around 6.5 to 6.6% by the end of the fiscal year.
Right. Rajni, just to further that point that you said, that not in the December meeting, but in the Feb meeting is when you actually expect a rate cut to take place. What is the quantum that you would expect that time around?
So we feel that RBI is going to take small steps to cut the rates. So we are expecting a 25 basis point rate cut in the Feb meeting, followed by earlier our expectation was that would be followed